There's a lot of people that are facing mortgage renewal in 2026. If you signed a 5-year mortgage in 2021 when the rates were at the lowest, this may be a shock to you. So this is why it's being called mortgage renewal shock, because the payments are going to increase. Now, the good news is you are not alone. There's a lot of people that are going to be dealing with this year, and there is a way to unpack this so you can kind of take that control back. And today I'd like to show you how to do that. You might have heard that some homeowners might be looking at as much as a 26% increase in their mortgage payment. You can manage this. There are ways of managing this. I'm going to tell you how to do it, but 26% increase on a mortgage payment sounds like a really scary number. So what I want you to do first of all is take a deep breath. Boil this thing down to what it essentially is, which is a math problem. If your mortgage is coming up for renewal in 2026, you're going to be moving from a very low rate to a much higher one. The good news is the rates are not as high now as they were in 2023 and 2024, even 2025. So we've come down quite a bit in terms of what the interest rates are. They're still a long way away from where they were when you got your mortgage in 2021, but that's okay. We can manage this. So the first step in this process, and it's very easy to procrastinate and not do this. I'm famous for doing that myself, but you need to face the numbers. You need to figure out, first of all, how much do you owe on your mortgage right now? You may have already gotten some renewal papers, either from your bank or from your mortgage broker. Maybe it's in your email and you haven't looked at it, but that will include things like your current amount owing on your mortgage. It will tell you what your new interest rate is, and it will probably also tell you what your new payments are. If you're okay with all of that, that's good, but I still recommend that you take a look around and shop that number, because the renewal documents that are sent to you, this is not a foregone conclusion. It's an offer. It's an offer that your lender is making to you. So you have the ability to change lenders if it makes sense. So of course, the first step is figure out how much you owe, what your new interest rate is going to be, and what that translates into in terms of payments, okay? The next thing you can do when you have that information is you can go online and you can use a mortgage calculator. I have one right on my website. Just click in the description below. You will see it there. And all you need to do is enter in the information that will help you calculate your payments based on what your mortgage needs to be, what the current interest rates are, and how that translates into payments. And remember, when you're talking about payments, you can also do things like, if I'm on a bi-weekly payment and it comes out twice a month, I can go to monthly. You can go to weekly if you wanted to. There's a number of different ways that you can slice it so it makes sense for your cash flow and for your budget. So the nice thing about getting your arms around how much you owe on your mortgage and interest rates going forward and what the payment's going to be is just in the process of doing that, you're already going to start to feel better.